Good morning, everyone. I'm Gaurav Bisa from InCred Equities. Nifty had an interesting session after the tariffs were levied on India and the other countries. The fear is out, and it did not play out as people are expecting. This is something which I shared earlier as well that price discounts everything. I'm not saying that there cannot be no correction as such, but the correction is going to be limited because if people are fearful, people anticipating, they will act on those fears and anticipation, and that will get reflected in the prices. Now that it is in the open, we may see more of a time correction that was expected, that we will see more of a time correction. The momentum will start from June. And again, reasons keep changing, and I don't chase reasons. I generally follow the patterns and structures. US markets yesterday closed on a very weak note. S&P was down 5%, Nasdaq was down almost 6%. Russell 2000 was down about 6.5%, 7%. It was a very weak session for US markets indeed. More than the other indices, it's the US market that witnessed the biggest drawback. And it's in line with expectations again. I've been saying that US markets can correct to form wave C or towards completion of wave C. It was part of the weekly report as well. And that will result in more of a time correction than price correction for Indian markets. And it is going exactly as has been mentioned in the report as well. Though we can again discuss about FIs being net sellers of 2,800 crores, and XYZ factors. Again, there are two factors that one need to watch out for. One, as I said, the levels 22,800 is the strong support area, immediate support 23,000 levels based on option position that has been seen. Another interesting aspect is the formation of inverse head and shoulder pattern on Nifty on hourly charts and daily charts. The right shoulder is in the formation. We are talking about anticipation at this point in time. So if this pattern turns out to be correct, and the ideal level would be a fall towards 2800 to form a right shoulder. Generally, in head and shoulder pattern, both the shoulders should be of the similar size. It rarely can be exactly the same size, but if they are on the similar size, it's a more textbook kind of pattern. Yeah, the previous low was 22,750, 22,800. This time the low was 23,100. Not very far off, but any declines towards 22,800 would make it more lucrative. And if that turns out to be support and if it starts inching higher, that itself can push it towards 23,900, which will be the neckline. Once it gives a close about 23,900, it will confirm a breakout of inverse head and shoulder pattern breakout. It's a reversal pattern in nature, which can push Nifty towards 25,000, 25,200 levels. So things are going in line, in sync of our views, and it is interesting to see how Nifty pans out. As I said, it's going to be more of a time correction than price correction going forward. SGX is pointing towards 100 points cut as we speak. So even after a 4.4%, 5% fall in US markets, SGX is less than half a percent down. It may fall more, but as I said, any declines towards 20,000 can be used as a buying opportunity. Of course, there is going to be some risk, but since 20,000 put has a good concentration, there's a possibility that if sustains, we may see a sharp bounce back sort of coming in. So that will be from my side. Thank you.
Investments in securities market are a subject to market risk. Read all the related documents carefully before investing.